Well, hi everyone. Welcome to the Buffett and Beyond Stock Analysis Weekly Letter. And we're going over a retail store company which just came out with earnings, and that is Dollar General. And these methodologies are based on the book Buffett and Beyond, second edition. And remember, folks, if you want a whole host or the archive of all these stocks, access to the computer program, ETFs, videos, just sign up for our 2-week free subscription. All we need is your email. We don't even need your name, just your email. And go to Buffett and Beyond down here at the bottom. Go to buffettandbeyond.com and sign up for the 2-week free subscription, and you will get everything, folks. And it's the archive that's really worth all the money in the world. And remember, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And let's go over Dollar General. And Dollar General Corporation is a discount retailer operating in the U.S. and now Mexico. And as of just a couple of months ago, it had over 19,000 locations, with the greatest concentration of stores in the southern, southwest, midwestern, and eastern and southeastern regions of the country. And it offers, and you know what it does, folks, broad selection of merchandise, including consumable items, seasonal items, home products, and apparel. And merchandise includes national and private brands, and that's where the money is, folks, private brands. Anyway, most everything is priced at $10 or less, and so I guess it could do away with the name Dollar General, and it has 170,000 full-time employees. Okay, now let's look at Dollar General and some statistics compared to the average stock in our 1,800 stock database. And the clean surplus ROE, the green line for Dollar General, shows that it's above the average stock in our database, which is this blue line of 13.5%. Now, about net income, which are the clean surplus earnings, it is a tad lower than the average stock, but it is rising, as we'll see in the next slide. And then when it comes to revenue, and that's so important, folks, if you don't have the revenue, you can't bring it to the bottom line. Revenue of 12.1% versus the average stock of 7.1%. Now, why did this extra money coming in not translate into greater earnings? And that was because the cost of Dollar General goods, their entire inventory, rose with this bout of inflation, and it didn't pass it on to the consumer, or didn't pass on much to the consumer. So even though the cost of things went up, the money came in, but the cost of things ate away at the profits. And that's one thing we have to think about. Are those profits going to come back? And when we look at the numbers here, we want to look at the net income, and this is the clean surplus earnings. And we can see that the earnings had been going up all until this year. We're going to see that in the chart. So it went from 1068 down to 1003. Next year, expected to go up again. Now let's see how that translates into percentages. So it was making in 2022 5% net income growth. We call that earnings growth, and then it fell. So this is this year, and we're going to see on the chart right where this shows up. But for next year, expected to be up to 9.3%. And revenue growth, it fell down in 2023. And the question is, why did the revenue fall in a store like Dollar General? Because you would think with inflation and prices going up, people would run to a store like Dollar General. And that question is still being asked out there, so we don't have an answer for it. So let's look at the averages. These are the 5-year averages that we showed in the chart right there. Let's go back to the 5-year averages, and you can see that even for 2024, that they will not reach the averages of the past 5 years. So they're coming back, but how long is it going to take to come back? Because Dollar General is selling at a much lower price to earnings ratio than is Walmart, and Walmart's going to come in, and so is Target before the end of this video. Okay, let's look at the 1 year. Black line is the S&P 500, and this yellow colored line is Dollar General, and you can see right where they disappointed, and you can see that somebody knew that they weren't going to meet their projections as the stock started drifting down. Then all of a sudden, 3 months ago or 2.5 months ago, it came out with a disappointing earnings, and that's where it fell. And now it's sitting along this bottom line. Is it going to come back? Well, as it approaches and as it grows, yeah, it will come back. The key is, will it be 2024? Will it be 2025? That's what we're looking at. 5 years, wow, this stock was the yellow line again. This stock was doing very, very well, and then all of a sudden it just wasn't meeting the numbers, and people are having a little problem with why they didn't meet their numbers. And of course, it has to do with the cost of inventory going up and them not being able to bring that profit down to the bottom line. Again, the black line down here is the S&P 500. So we're looking at this stock coming back over 5 years to about what the S&P 500 does, which is not a bad stock, folks. If you can pick a stock that does as good as the S&P 500, not too bad, except now you're investing in one stock relative to investing in this black line, which is 500 stocks. So but we want to think about, is this stock going to come back and be a super performer as it was in the past? And that's the big question here. Now, let's look at, well, we had this chart in our daily newsletter, which if you sign up for the 2-week subscription, free subscription, you will see this chart. And we're comparing with Amazon is this red line, Target is this yellow line, and the blue line is Walmart. So if we're looking at Target, if we're looking at Amazon, and we know that this line, which isn't there, but would be Dollar General performed as well as the S&P 500, and Dollar General would be right in with this whole group here. So when we look at Amazon, when we look at Walmart, when we look at Target, and when we look at Dollar General, which is not on this chart, but well, here it is back here, performing the same as the S&P 500. Out of these 4 stocks, Amazon, Walmart, Target, and Dollar General, they're all doing just as well as the S&P 500. So I bet you didn't know that, folks, because I'll tell you what, it surprised me when I put these all on the same chart. So the thing is that when we talked about Walmart in our daily letters during the week, because they came out with earnings just on, it was Thursday morning. They came out, they have 3,500 stores. I'm talking about Walmart now. And guess what, folks? 60% of what they sell, 60% of Walmart's sales are grocery items. Can you believe that? With that store that big, all their money is made in the grocery items. So if Dollar General, which would be right down here, Dollar General having 19,000 locations, don't you think that if Dollar General sold grocery items, if those stores were big enough? Now, I'm not saying I went to one Dollar General in my life and the store is not big enough to have grocery items, but if it did, over 19,000 stores versus Walmart's 3,500 stores. If Dollar General had produce, maybe all of a sudden we would see this stock outperform a long ways. But remember, right in here is Target. So Target had done very well, but it got caught up in what? Inventory. Yep, it ordered too much inventory and got stuck with inventory for about a year and almost 2 years now. And they're getting rid of it, so their inventory is down 17%, which is good for them because they're overstocked. And so we have this clutter of stores in here, folks, and we're just not sure which one to buy. Do we stick with Dollar General? Do we stick with Amazon? Do we stick with Target? Target's in one of our portfolios. So that's the magic question, and we're not sure, but we'll see which of these stores come back the strongest over the next year or so. So, folks, remember, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And right now, we're betting on Dollar General coming back. We're also betting on Target coming back. They have nice stores. So we'll see as we go along. So stay tuned, folks, because we'll keep you up to date in our daily newsletter. That's why you want to go for the 2-week subscription. All right, folks, this has been a rough couple of weeks in the market. Things aren't looking too good, and we'll see what happens over the next couple of weeks now that earnings season is coming to a close. So, folks, have a great weekend, and we'll see you back here next time.